Welcome everyone to this latest edition of the Sharesify podcast. I'm joined as usual by my partners in crime, Ian Conway and James Crux. Hey Dan, how you doing, chaps?
Very good, Steve.
Yeah, great.
Mark.
Thanks, Steve.
Lots to talk about. There's always lots to talk about, isn't there? Markets are bubbling along really nicely, aren't they? S&P and Nasdaq both are setting new records again. Starting to ask questions people are about, is this getting over frothy? I think, Ian, people have been asking if it's over frothy for months, and it carries on going up.
You're absolutely right, Steve. I mean, it is months. I think we've had 9 weeks of back-to-back gains in the S&P. We haven't had a down week since the end of March. So you've got S&P's up 20%, Nasdaq is up 33% in that period, and now the most extraordinary thing is I know we were, NVDA's been a big thing this week, and Jensen Huang's been out and talking about chips. The funniest thing to me was when he started recommending Marvell technology and saying it was the next $1 trillion stock. You've got a CEO of the biggest company in the world now saying this company is going to be $1 trillion.
Well, I mean, the interesting thing, I mean, you just have to look at it for the cold light day. I mean, Marvel's current market cap is about $240 billion, right? It's got a hell of a long way to go to get to $1 trillion. I'd be very surprised if it's the next $1 trillion company, if it ever gets there at all. But I mean, of course, there's so much excitement around IPOs for change, and it seems ages since we've had a really exciting IPO. So we've been talking ad nauseum about SpaceX. It looks like it's going to kick off its roadshow probably on Thursday, so the speculation says, and we might get details of the pricing even as quickly as today or this evening. But of course, this seems to have really ignited the kind of race for the next big IPO. Anthropic has allegedly filed its secret filings with the SEC to list. Of course, it recently raised some capital from investors, about $65 billion. That was at a market value of about $900 billion. So almost $1 trillion company in its own right. And of course, now we've got OpenAI seems to be looking increasingly at, can we get there first, or is it going to be late this year? It's going to be early next year. So there's a lot of money flooded around about, chasing this. It all comes down to how much appetite is there for AI?
Well, here's an interesting thing, okay? The US exchanges and index compilers have changed the rules so that basically they're going to have to buy SpaceX, OpenAI, and Anthropic when they come out. Now, just SpaceX, they reckon the index buying could be $500 billion. So retail will be chasing it, but the ETFs will be chasing it as well, all the passives, and then the active ETFs as well. And I saw another really interesting stat talking of the $1 trillion club, VOO, VOO, which is the Vanguard S&P500 ETF, $1 trillion in assets now.
Right, brilliant.
Absolutely
amazing. You mentioned about listing rules, because I know that S&P and I think Nasdaq as well, they used to demand that new listings floated for I think it's 3 months before they could actually enter the index, and the idea was to allow the market to react and adjust to a more stable pricing structure, and they've really shortened that down. So it looks like SpaceX when it floats, Anthropic when they float, they're looking at about 2 weeks before they pop in, and that's what you're talking about the big index trackers. S&P 500, Nasdaq 100 trackers are all going to have to dive in. So I guess the ideal situation, if you're an interested retail investor, will be, whoa, hands off. Let's see how things go, because they could pop, they could drop, they could pop, they could drop. It could be really volatile the next 6-9 months straight after an IPO. It might be best to just hands off for a year and then reassess.
Meanwhile, James, what's been going on in the UK? What's grabbed you?
Yeah, very hectic news flow in terms of the consumer-facing sectors, Ian. So we've had more upgrades from Ramsden's and Applied Nutrition. Now Ramsden's is obviously the pawnbroker. That booming gold price is really benefiting its precious metals buying arm. And Applied Nutrition, obviously the sort of sports supplements business. Yet another upgrade, sports some manufacturing capacity in the States, and struck a licensing deal with Mondelez. And now that's interesting because it opens doors with Walmart in the States, obviously the world's biggest retailer. Very interesting news.
Isn't that interesting? We've talked about Applied Nutrition a couple of times. Of course, when it first came to the market, I think we all thought, a bit of a fad, but it's got legs, this thing.
Absolutely. Very sort of muscling its way in terms of market share around the globe. And then some other ones that caught my eye. Debenhams returned to growth there, formerly Boohoo. And we've got a new CEO at Currys now. So this is Frederick Tonnesson, who tripled the profits of the Nordics business. So it looks like it could be a worthy successor to Alex Baldock.
Nice. And we've had a bit of M&A as well, haven't we?
We have in the trust space. So we had Bluefield Solar Income. That one's recommended a 550 million bid from DRX, surprisingly. I think analysts probably thought it might be some sort of private equity buyer. So that one caught the market by surprise. And it also lit a bit of a fire across some other names in the renewable infrastructure sector. Now, the offer is it's a premium to the share price before Bluefield Solar put itself up for sale, but it's a modest discount to recent NAV. But I suppose it gives those shareholders a clean cash exit. I think there's something else you had your eye on, wasn't there, Ian, in terms of trust bid action?
I can't think of the trust, but well, certainly we saw a bid for EZJ, a potential bid for EZJ.
Yeah, it's short shrift it was given, wasn't it?
I honestly, you look at it, and well, for starters, it's an American private equity firm, and European rules prohibit non-EU buyers from buying an EU airline. How's that going to work? So at best, they could have a sort of 49% stake. They're not going to be able to own a majority stake in it. And they said, oh, yeah, it'll be...
Is EasyJet an EU flyer, though? I suppose that's where it's registered.
Classified Yeah. Yeah, it's slots all over Europe, if you think about it.
Well, sure, I know where it flies to, but I mean, it's going to be where it's domiciled, I guess. If it's domiciled in the UK, then it wouldn't be in the EU. I mean, this would seem to be a massive oversight from the potential buyer if they can't buy a majority stake.
I know, it's mad. We also had some quite interesting small cap company stuff come out as well. EnSilica, which is one that you know, Steve. Sort of very
not the trainers.
No, not the trainers. Very specialist chip making and sort of radio frequency stuff. They won another contract, this time from big German automotive parts maker. That's just demonstrated that I think they can meet the really stringent manufacturing standards in Germany. That opens up another big market for them. We had Gooch and Housego come out. They had a pretty positive trading update as well. Again, this is more defense related. And we had today Discover IE as well, or Discovery. Can never remember how you pronounce it, but good presentation by the CEO. I was tuned into that this morning. Shares have had a very nice run. I recommended it back early February, about £6.20. They're about £7.20 now, but I think that thing's got legs still, I have to say.
It's been a great company for many, many years. I've written about it for about a decade, and it's really transformed itself from really a basic industrial kit supplier to really climbing up the value chain and providing bespoke solutions to quite high-tech industries. So I mean, it's a really good example, I think, of a company that had a relatively low margin business, and it's really changed how it operates and what it does, to really draw itself up the value chain.
Yeah, absolutely. I should also mention, by the way, very good conversation yesterday with Bloomberg Intelligence senior oil analyst, Sully Yilmaz. Now, he's based in Dubai, and really recommend watching that podcast. It's on our website. I would say be ready for oil prices. My key takeaway from it was oil prices are not going to go back down a lot. If they do, it might be sort of $10, $15 is my impression. But, forward futures are looking at $75, $80 a year from now. I don't think that's wrong. There's various reasons. There's inventory situation. There's the fact production can't come back quite so quickly. And Sully says also there's going to be in future an embedded Hormuz premium, which there was apparently in the 70s. We're all too young to remember that, naturally. But
interestingly as well, that the knock-on effect here is going to be with potential inflation and seeing pressure on inflationary pressure. So in which case, our rates going to stay higher for longer. We've been saying that rates higher for longer. They've already been higher for longer. Are we going to see central banks actually start to raise rates again? We've been talking about downward cycles. Who knows? Maybe they'll have to go back up.
Yeah, and that's going to be tricky. That's going to be another headwind for the market, I think, along with valuations. What have we got, James? We got a couple of consumer names coming end of this week.
We've got Brown Forman set to report. So that's the Jack Daniels maker.
JD.
A bit of JD. That deal with Pernod failed to go through, but it'll be interesting to see what they say about demand in the spirits market. And just in the investment trust patch, we've got capital gearing, which is the wealth preserver, to see how perhaps that fund is positioned given frothy markets.
Well, I wrote, very interestingly, James. I mean, I wrote an investment trust piece the other day, and you're talking about the most popular investment trust with UK retail investors. And for years, this list has been pretty much stable, and City of London is firmly in it. Now, we're talking about Scottish Mortgage, City of London, JP Morgan Growth and Income Trust. There's a couple of others in there as well. City of London certainly in there, so it will draw a lot of attention, definitely.
And Steve, you've got Sienna still to come as well, another blast from the past.
Sienna, yeah, I'm not sure. I know Sienna very well, actually. And it seems to have been around for a long time, but I haven't looked at it for ages.
No, it's another one of those sort of 99 2000 boom kind of stocks that just sort of faded into the faded into the background, and as now I'm sure there'll be a lot of attention on it because somehow it's going to be an AI blooming picks and shovels story, isn't it?
So something we forgot to remember at the start of the show, and it's my fault, but of course, on the 24th of June, we're doing our first ever webinar. We've got a couple of guests on. They're going to be covering Japanese investing, going to be covering European investing. So this is free. This is online. 24th of June. It's well worth plugging into that, listeners. And you've got our registration page on the Shares website. Come and join us by all means.
Yeah, please do. That'd be well worth tuning into. Go to the events section and you can sign in there, and we look forward to seeing you guys. We'll catch you on Friday. That's it from us for now. Cheers.
Take care.